Well, we had six operating brands in 24. We've now got eight, and we have a plan to move to at least 10 by the end of this year.
Hello, you're watching Proactive. Joining me is Digital Box CEO James Carter. James, very good to speak with you this morning. You're out with your 2024 results, and it looks like it really was a landmark year for Digital Box.
Yes, it was a good turnaround year for us. We managed to grow the business in revenue terms by 31%, and outperform the market in two key areas, really, which is one, from an audience perspective, we grew by 10% against a backdrop for news media that generally is finding it very tricky and is in decline. And from an advertising point of view, the revenue growth really sort of outperformed the growth in the global advertising market or digital advertising market, where at best, really on a global basis, it grew by 10% over the past year, and we did at least double that. So it was a pleasing year, with good results against our underlying business, and some really strong results on some focus areas within the business, like TV Guide.
What would you put your outperformance down to, James? Is it the strength of your brands?
It's the strength of our brands and the strength of our teams that really deliver fantastic engagement, and their ability to really produce very efficient editorial delivery that really that generates scale in terms of audience. So the fact that our editorial teams are really very well tuned in to what their audiences want to consume really helps us outperform the average player in the market, for sure. From a commercial point of view, there's a whole set of skills that we have within the business, which are both human skills and ad stack build technology qualities that we have. So the graphene ad stack that we have in place and have put into things like TV Guide, enhanced by human inputs, is really a key reason why we're driving performance ahead of market averages.
You singled out TV Guide, but the Tab, the Poke also doing very well, as well as the Daily Mash. And you've added to your portfolio of brands, James. So how does that position you at the moment?
Yes, we had six operating brands in 24. We've now got eight, and we have a plan to move to at least 10 by the end of this year. The key areas of performance really against the existing portfolio, well, the Tab, you're absolutely right, did well with 15% traffic growth. Some of that was contributed by an acquisition that we made about a year and a half ago, which was an acquisition from MediaChain, which was a social page called 99 Problems. And we acquired it after it had been left relatively dormant for a period of time from MediaChain. We managed to move it from delivering around and reach as a sort of key metric that interprets in the end to traffic. But we managed to shift its reach on the social page that we aligned with the Tab from about 500,000 a day to about 10 million now. So the level of engagement has increased dramatically, and that's been contributing well to the audience growth that we're seeing on the Tab. So that's part of the reason there. TV Guide, slightly different reasons for its growth, but 90% traffic growth in Q4 last year. We made quite a lot of technology changes during the year. So we moved to a sort of web app experience within the app market. So some of the TV Guide audience have been driven through the app stores on both, or purely on iOS actually, but is now on Android as well. And so we've introduced a web app experience that basically puts a seamless process in place to serve content out to open web and app users. And that's seen a significant increase in audience volumes over the past year. So that's been very effective. And with the Poke, we increased the volume of content that we're publishing. With what's happening on the other side of the Atlantic, there's plenty of material to laugh at. And the Poke is one of the best at gathering humorous content on the web. So investing in further content was part of the reason on the Poke growth of 22%.
James, how are your recent acquisitions being integrated at the moment? All going smoothly?
Yes, absolutely. I mean, the assets that I mentioned, TV Guide, the Tab, and the Poke, were all fully formed assets, as we would call them, where they had operations in place, but they were underperforming, and we were able to sort of refresh them and refocus them and bring them to life in a better way, in a more profitable way. We are also looking at things that are performing less well as part of our acquisition process. So to give you a steer on a site that we launched about a month ago, Reality Shrine, which is a reality TV focused site. We managed to bring that together through the acquisition of Reality Tidbit from GRV Media that we made in November, December last year. And combined it with a number of other assets that we had internally. So we had a social page called the Pop Shrine that we used, and blended all of these things together to create the product that you see now, Reality Shrine. And the benefit of doing that is really it gives you an enhanced beginning as a new product. So instantly, the moment we launched Reality Shrine, we were straight into Google. Which we wouldn't have otherwise done had we not taken all of the good bits out of the basket of assets that we brought together to create that product. So there's sort of two views of how we're looking at the acquisition opportunities, one really being fully formed and the other being a sort of fractional process where we bring elements together to create greater value.
James, you ended the year with quite a strong cash position. You've already alluded to perhaps more acquisitions ahead. How does 2025 look so far for Digital Box?
Yeah, 2025 is looking good. It's looking in line with our expectations towards the end of Q1. I mean, there's still a few days to go, but it's in line with expectations. The ad market, we took forecasts from PwC that pointed towards a 10% growth in 25, 26, and 27. And I think the global digital ad market is expected to put on about 251 billion, I think, over the next few years compared to 2024. We're sort of cautiously optimistic. You know, we can't pretend that the global economy is in great shape. But I think we'd much rather be operating in a space where the advertising market is forecast to grow by 10% than 1%. You know, so we're operating in the right space, I think it's fair to say.
James, I hope you'll keep us posted on any progress this year. Thank you very much for the update today.
Thank you, Stephen.
That's James Carter, the CEO of Digital Box.